What's going on, everybody? I hope you're having an amazing day. Now this video is going to be about sniper entries and exits and how I go about finding critical points and then finding those sniper entries and exits. And we're going to use the Bitcoin chart as the example today, and we're on the daily chart at the moment. So the first thing I'm going to do naturally is mark the all-time high. I'm going to mark 3 critical zones that I think look like there could be some critical resistances moving forward. We can see that volume is still leaving, even though this is a relatively bullish sign. We are somewhat overbought at the moment. So we could theoretically see this push back up into the 73K range, maybe test all-time high, maybe even pop up a little bit higher than that and get a bearish divergence if the action and the volume of the market wanted to stay consistent with that. Until that time, we'll watch this chart and watch for some critical levels. The other one I'm going to add is going to be right down here. Now I added these levels because, as you can see, they've been major resistances, resistance. We've had 2 here, even dropping down to this line. There was a few resistances that ended up selling down all the way to 55 to create the range low. So this is a critical zone. This is what we're testing at the moment. We just tapped that at 70K, like 70.1K. Now from there, I'd be going to the 4 hour and we'll see what the 4 hour is looking like. So you still see we're in a bullish crossover. So this does have the opportunity to swing back up. And your point of control for volume is sitting under price action. So that's a good thing to see too for bulls. And same thing with the hourly. So the hourly does have a bullish crossover. So all 3 of them are set up to look like they could be poised to potentially push back up to the 73K range. But that's also good for us because, like I was saying, we're looking for short positions. So we want this to pull up so we can ideally get the perfect sniper entry. Now, ideally what I like to be looking for before I really get into a sniper entry or exit is to start to see is that I would want to see this cross bearish, and then I would want to see it test the LRC as a resistance confirmation. That point when it does the confirmation would be my ideal entry and what would be considered the safest entry with the highest probability based on the crossover strategy. Now, for example, I can show you from this Bitcoin trade down here. We can see that price was moving down. We went to about 64,000. We got into the bullish crossover. Price did move up. And then we start to see price come down and start to test within this LRC range. And we confirm as a support in this situation because this is a support bounce. We're looking for price to move up. Now, obviously, if you're looking for a short, it's going to be the opposite. You're going to be looking for the resistance to get into the short, so price will push down. So when we see that happen, we would go into this local zone and we can zoom in on, let's say, the 30-minute time frame first. Now, zooming into the 30-minute, once you get that crossover and we start to get down into this zone right here, the first thing that I notice is that there is a regular bearish divergence, which you can see like this, where price is creating a lower low, where meanwhile on the MACD, you're creating higher lows. So if I pull this up, you can see that this is making higher lows. That would be a regular bullish divergence. That would be a sign that price could potentially swing. So as we see that, we would zoom into the 5-minute, for example. And I'm going to take this back into replay mode too so we can see it live. Let me see if it'll give me the crossover. Cool. So we can see there is nice volatility. We're watching this on the replay right now. Now, as this starts to pull down to that price, you can still see that we haven't officially crossed over just yet. So right around this point in time, you can see that price is holding on the 5-minute. We are holding bullish, and you're starting to see this big influx of volume. If you zoom in, you can see there's a massive influx of volume coming in. This would have been the first sign for me that there could have been potential that this would have broken down or that we could have gotten into the point of an extreme move. So I would have started watching the snipers anywhere from about 63.9 and then watching to see how far this would pull down in terms of volatility. Now you can see this pulls down really fast, and when this does happen, it typically, when you do see a crossover bullish sign as well, this has high probability for a fake out in this zone. And you can start to see this pivot signals popping up as well. Price starts to create a new lower low. And even though we start to push and continue to push down and sell off, notice that volume has not been necessarily leaving. We still have a big influx in volume. And based on this MACD, when we zoom out, kind of like what we saw in the other charts, there is a large divergence for a regular bullish divergence, because no matter even the fact that we pulled down, there's still showing a lot of uptrend. So anywhere in this zone would have been an ideal entry. You can see price hits a new lower low. Volume is still rolling in. The CCI is still oversold in this situation. So because it's oversold, it has plenty of room to move back up. And same with the MACD. The MACD is red. So when the MACD is red, it has a lot of room to move up. Now price starts to swing from this point, and we take off to the races from here as we just continue to moon. So that's something to watch for. That's a way that you can trade going from the 1 hour into the 5-minute. I like to go with volume first as my first divergence. especially if we're seeing a sell-off in price but the volume starts to go in an upflow. That would be my first sign of something funky going on, especially because price action was not showing any sort of sign of movement before that point. It was going sideways, and even with the volume influx, we still didn't see any sort of movement in price action. So that would have been my first sign. And then, yeah, just being patient with the sniper entries, knowing that anywhere from here to here would have been a good entry. So give or take a 1% zone from 64K to 63.3 would have been the ideal entry zone. And you would have found that basically going in from the 5-minute. And even if you looked at this from the 3-minute, it'll give you a pretty similar story. Now, this would have told you even sooner that this was already showing a lot of volume trend. We had already broken the 0 VFI and started showing bullish tendencies because we weren't breaking down into the negative mean, which would be a bearish trend. This would be the bullish side of the VFI. So because we saw that, these would all be other confluences that you can stack on top of this. So we'd be taking the same concept and doing the same thing for the short position as that trade starts to come to us. So theoretically, let's say that price wants to come up and we push up to, let's say, 71 or 72,000, let's say 71.4. And as we get up to this point, you start to see on the 5-minute or 3-minute that we cross into a bearish crossover, and then price starts to swing, and then you see a double top or a higher high, for example. Even though we're in a bearish crossover, those would be signs of a potential fake out, and you would also be looking for regular bearish divergences in that zone. Let me give you a quick little example. So for example, if price wanted to go up and then we come back down, let's say we create a higher high, that's when you could see it swing back down like this. So at this point, you'd be seeing the bearish crossover, for example, and then at this point, it would be the LRC retest for resistance. This would be the ideal sniper. This would be the safer bet. This would be the riskier initial entry because this could theoretically swing as high as it wants with volatility. And then from there, you can get your entry and play to whatever direction the trade wants to go to from there. Hopefully this video was helpful. If you have any other questions, drop it in the comments. And if you're not subscribed to the YouTube channel already, hit that subscribe button. I hope you all have an amazing day, and I'll see you in the next video.